Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, presently the Australian dollar is trading in a tight range on Tuesday stroke into Wednesday. A stronger US dollar continued to limit upside potential and also failing to clear the level of 70.15. We're still lurking around this region, but technically the market is somewhat lackluster and therefore could see a failed attempt and therefore look back towards 69.65. Unless we get a close above there, and that is the New York close, that will give us a 71-cent target. But as you can see, we've had at least 4 attempts here, and maybe this is time now to maybe see the weakness increase, and therefore look to that call. Anywhere towards the level around 69.20, 25 area should find demand. Turning to the euro, it also trades in a narrow range as investors weighed as the stronger US dollar against the longer-term bullish outlook for the euro still continues as safe haven demand supported the greenback. Tension in the Middle East persists and higher oil prices reinforce concerns that inflation could remain elevated. The US dollar, which is now hovering around 101 figure 15, is limiting upside for the euro, but all eyes will be on the ECB on Thursday's rate decision, which is expected to see its main refinancing rate to hold around 2.4 or 240%. The deposit facility rate is around 2.25% and the marginal lending facility at 2.65%. All eyes will be on Christina Lagarde comments, which will be closely followed in terms of how the inflation looks and the future path of the monetary policy. With the technicals negative, but the market still capped around that 115 area and maybe looking back towards 113.40.50. And like previously, demand is likely to step in and see a recovery. Dollar yen, well, the market posts a fresh high since 1986. And from there, there's still risk of intervention as it builds and maybe even seeing a very sharp downturn, one of these candles coming through. Although we have seen a break above 162.85, the market does need to break beneath 162.55 now to support a bearish case. We're trading around 162.90, but there is still a bit more work to do, and if we do see that break, we could see a move to 161 to 160. Into the fourth consecutive day, the sterling is still weak and still looking back towards this bottom side of the range, around 133.5. I do feel like previously a recovery will emerge from there and maybe see it back towards 134 to 135. Commodities, well, we broke the trend. The call was $250 in terms of a measured move, and we've seen half of that, and now looking towards the region of 4,200 to 4,300. In light of the break, the market is still relatively bullish, so I still feel the gains are likely to continue. Wrapping up with oil, well, the upside call to $85, 30.70 area has been reached after printing our high of 87. I am neutral because I feel the market may press on to 88 or even to 90, given the fact that this trend is relatively strong. But as I mentioned, it reached my target, so I'm neutral. That's the wrap. Thank you for joining me. As always, look after each day, Paul. Hope you enjoy the great start to the day.